Guys, let's talk about getting loans for your multifamily deals. There's this rule of thumb that says that the easier it is to get a loan on a deal, the less money you're going to make. So there are so many different types of loans out there. And the easiest one to get into when it comes to property anyway is a residential loan, which is your 1 to 4 unit. And in that case, though, you have to live in one of those units if you're going to take one of those on. But for this discussion, a house is not considered an investment simply because it doesn't produce cash flow. If we want to contrast a house, you have to put down a down payment, pay PMI, which is private mortgage insurance, and an interest rate that's based on your personal credit, your debt, your employment, and a whole bunch of other factors. To get that loan, you have to prove that you personally have the cash flow to afford the debt on that house because the bank doesn't even consider it to be an income-producing property. The opposite is true with something like multifamily. Picking and investing in the right multifamily deal is one of the most important things that you'll do when you're starting out. So structuring the right equity, the right debt, getting a good rate, and making sure you have the right cash flow on that deal is incredibly important. And in this case, your biggest partner in the deal is the bank because they're usually putting up 60 to 80% of the debt on that deal, depending on how you structure it. So financing is extremely important. You need to know the financing terms, get various ways on how you can structure that deal because it's going to cost you money. And a difference of only 1/4 of a point in interest on a huge deal will mean the difference between paying hundreds of thousands of dollars more per year. So many times a bank will offer an interest-only loan at certain percentages above Treasury rates when you're financing these types of deals, right? So that's good on larger ones. But you'll need to compare the rates and find the best one and the length of time for your situation. Another thing to make sure you line up is on the equity side is your down payment, right? You want to make sure that that's all set up too. So unlike buying a house, you don't want to pay the principal down. The objective is how much money you can cash flow on a monthly basis, right? That's the objective. As the land value appreciates and rents increase over time because you're driving appreciation of the property, you want to build up that cash flow. That's what you're looking for. The cash flow covers a debt payment and it gives you that passive income every month. There's no upside to paying down and driving down that debt side, right? There's just no upside in that. But with that said, I like to do long amortizations and I want to reduce the monthly payment to maximize overall cash flow. That's what I'm looking to do, right? This will vary on the type of loan and what the bank is willing to do with the property as well, because some of them will do a shorter amortization depending on, like, say, the age of the property. And if you are working with a larger deal, though, you should spend more time negotiating the rates and terms with the bank. So here are the 3 things that the bank is going to look for when they're considering your multifamily deal. Number 1, they're going to look at your net worth, which includes your liquidity and assets. Number 2, they're going to look at your credit. They want to see if you have any lates or any bankruptcies or any other blemishes. And number 3, they're going to want to look at your track record. They want to look at your experience and do you have any experience managing and buying real estate. So to get started with number 1, you need to have that net worth or liquidity. Whether you have it yourself or whether you lean on partners, you have to have that liquidity and net worth. This means partnering with experienced syndicators that have done multifamily deals in the past or have a good foundation in a nice size commercial real estate deal. Then you have to make sure that your credit is in good shape, right? There are many credit repair companies out there that'll work to get rid of those trade lines that may impact your credit score. So if you know your score is lacking right now, I suggest you get started on that today. So, because it's going to take 60, 90 days to clear all that up. And for your track record, number 3, you can lean on a property management company. If you can find a company that manages many units and they have a good reputation in the area and they're easy to work with, you'll be good to go, okay? So anyway, let me know what you think. If you have any lenders, credit repair companies, or property managers that you'd like to recommend, please leave them in the comments. And if I provide any value for you, please go ahead and share the video. I'd appreciate it. Thanks a lot, guys, and I hope you have a good one. Talk to you soon. Bye.